Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to take a look at our W3 or Wave 3 trade setup with an example that unfolded on the NQ yesterday. But first, as usual, let's start with our risk disclaimer. And just remind you that all examples in these videos should be considered as hypothetical. No trades are actually taken, they're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing. Put another way, all professional traders know and understand that losses can and will and do unfold. It's an important part of any trading strategy that there always will be losses. Right, for those of you who've been following MTPredictor for a while will know that we do not believe in basically blindly following our automatic trade setups all the time, because markets go in cycles. So what does this mean? It means that basically for just over 50% of the time, or maybe slightly more, markets are basically in a random phase. In other words, you can't really discern any clear pattern, and you shouldn't be doing any kind of analysis or trading at all. However, in the other 50% of the time, the markets have a clearer pattern, and then you can try and do some meaningful analysis. So the question is, how do you first decide when the market pattern is becoming clear? For this, we first go to the higher time frame chart. So this example, I'm looking at the NQ yesterday, which was the 11th of December here, and I'm actually looking on a 24-hour chart for the NQ in today's examples. And for this, we then look to see whether the market is making a meaningful reversal at our higher time frame, or in this case on the 15-minute chart, our DP support and resistance zones. Now remember, our DP support and resistance zones are leading indicators. They're on the chart in advance. So I want to just jump back before this low was made here, or around about 11:30 yesterday, and show you how to project these in advance. So here I went back to the last major low, which was here. Right mouse click and do decision point, and can you see how that gave you an area of potential support? But can you see how it's on the chart before the market even got there? So if I turn trading mode off, can you see how the market went down and then made a nice reversal at that particular level there? So therefore it was on the chart in advance. So what are we looking for in our Wave 3 trade setup? Well, now if I go down to a shorter time frame chart, in this case the 2-minute, I'm just going to scroll back to when that came in. Can you see how when the low came in here, which was at 11:26, can you see that, the low there? It actually made a reversal at our support level. In other words, the market was making a meaningful reversal at higher time frame support. So in other words, at this particular point in time, the picture starts to become clear. So that's when we start to look at our Elliott wave patterns, and this is why I've developed my unique isolation approach to Elliott wave, in that we don't look at the Elliott wave pattern all the time, again because markets go in cycles and half the time they're basically random. We start at a meaningful reversal, so we'll be starting here. So the initial move up would be a wave 1. We're then looking for an ABC correction down into a wave 2, and that would be our W3 or Wave 3 trade setup. I'm just going to right mouse click over this blue buy bar here, do analysis, and as you can see we have then our potential target placed on the chart. The reason we like this Wave 3 trade setup is, as you can see, the target would have been at our typical Wave 3 WPT, and this would have been a very, very nice trade, because as you can see the market did indeed get up to that typical Wave 3 WPT, where a profit was available of almost, well, just over 11R profit. In other words, this profit was approximately 11 times greater than initial risk. Remember, we use correct position sizing, in this case keeping our risk less than 2% of a sample $20,000 account. That would have allowed you to go long one contract to keep your initial risk small, and the profit would have been approximately 11 times the initial risk. So that's why we like this, is because a Wave 3 is normally the strongest and longest in a completed 5-wave sequence, therefore its profit potential is large in relation to the initial risks. I'll have to look at this TS1 buy setup here, because you may well have been an aggressive trader and again had seen that this was coming in at higher time frame support. The initial move up wave 1, if I right mouse click over the analysis here, again an ABC correction into that first decline. Our MTP trend was grey stroke blue, also indicating the logical trend was up. You may well have looked to go in long at this particular area here. If you had have done, the market went up, took you in, and then came down and would have stopped you out. In other words, off this first TS1 buy setup here, this would have been a losing trade. As I said at the start, losses can and will and do unfold, but the loss was kept small so the loss would have only been what we call one risk unit. The market then came down, made our W3 trade setup to get you into another long trade. This time the profit would have been 11 times the initial risk, or 11 times the previous loss. So this is why we like our W3 trade setup, is because in Elliott wave terms it tries to get you in to a wave 3, which is normally the strongest and longest in a completed 5-wave sequence. But how we piece this all together, it starts at the higher time frame chart. So it starts in this case at our 15-minute support zone. So you can see it there. That's our 15-minute support zone, or higher time frame support zone on the chart. So as the market came down to that, we then wait to see whether it makes a meaningful reversal at that level, which it did, and that's when we start our Elliott wave sequence. So that we're starting there, the initial move up will be wave 1, subdivides into an ABC into a wave 2, to then look to trade the wave 3, where a profit of approximately 11R, or 11 times the initial risk, was available. So a good example there of a potential wave 3 or W3 trade setup. Just as a PS, obviously you wouldn't be looking to try and reverse at these levels here because we hadn't reached our profit target. And any other trade setups here a bit later on, I mean this one here was actually a potential profitable trade, but obviously this was a bit later in the sequence. So what we're really looking for is the first correction against an established new trend, and that's the wave 2, which then is the end of the wave 2, which starts the wave 3. So this is what we're looking for. We're looking for a meaningful reversal, higher time frame support or resistance. The initial move off that is wave 1. We then have an ABC correction into wave 2 to then look to trade the wave 3. So a good example unfolding yesterday on a 2-minute chart of the NQ on a 24-hour session chart. There you can see with our higher time frame support coming in on our 15-minute chart. I'll just scroll back there, which as we can see came off that last low to nail the low of the day there very nicely. So a good example there of our, scroll back again, of our wave 3 or W3 trade setup in MTPredictor.